And Brian Nowak. He's Senior Internet Equity Research Analyst at Morgan Stanley. Brian, it's good to have you. You're always so thoughtful on Amazon. It seems obvious that they would be the ones with the same-day shipping lead, right? I mean, how far are they ahead of the competition? And what do you mean in the sense that this is about to go mainstream?
Yeah, thanks for having me, Kelly, as always. You know, I think it's still early in the way we think about same-day delivery, but it's interesting the way things have changed post-shelter in, where you now have a lot of new players in the shared economy across Uber and DoorDash, and a lot of players who are partnering with traditional retailers to bring things to people same day, 1 to 2 hours. Think about how you're ordering your groceries, your random items from convenience stores like Slurpees or Slim Jims. You can get a lot of things now in 1 to 2 hours. And so what we think happens next with Amazon, when we sort of look at the types of build they're doing in the last mile and what they're prepping for, we think a broader same-day offering is on the come from Amazon. And what we think that's going to do is actually going to further change consumer behavior, conditioning people to expect things even faster than they do now,
right,
and ultimately lead to even more share gains for Amazon.
So, you know, you make a good point that a lot of the things, so for instance, I can order same-day delivery from Whole Foods right now, an Amazon company, but obviously there's other grocers who do this as well. I can go to Walmart, I can go to Target, I can do pickup and get things pretty much on demand. Is Amazon going to be able to maintain a lead relative to them? And if so, what are they going to do to fight back?
Yeah, it's a very good question. So it's competitive, and when you look at the amount of consumer expenditure on these buckets of what we're calling on-demand categories, so grocery, consumer packaged goods, et cetera, those categories of consumer expenditure make up about 65% of the remaining dollars that are offline in the United States. So this is the next battleground. And so we think that the key to really delivering items to people at scale in a profitable manner is back-end logistics. So how do you manage micro-fulfillment in warehouses? How do you pick and pack more items per hour? How do you deliver things faster? That's actually Amazon's competitive advantage 101. So we expect Amazon to build. We expect them to roll out more and more micro-fulfillment or new logistics technologies. And we think that is going to be one of their advantages versus these competitors. But you also hit the nail on the head in that don't expect the traditional retailers and the grocery stores to give up. We think they're going to continue to partner with Uber, partner with DoorDash, and partner with more of these emerging companies just to try to compete against Amazon. And
which is something to look at if you're an Uber investor, a DoorDash investor, and the rest of it. But I just want to make it clear to everybody, your price target on Amazon is $4,500. That's significant upside from where it's trading today. And it's interesting to note that two-day Prime began 16 years ago, so maybe it is time for the upgrade. Brian, since we have you here, I'm going to switch gears. Hope I don't put you on the spot, but I just want to ask about Jeff Bezos going into space. Now that he's handing over CEO duties to Andy Jassy, he is still a big Amazon shareholder. I mean, is there any analyst kind of implication in this announcement today?
No, nothing material. I mean, space has been a large part of Jeff Bezos's ambitions personally for a long time. So I don't think it's that unexpected. You know, Blue Origin has been an area of his personal investment for years. And I would say point two, the bench at Amazon is very deep. You know, you mentioned Andy Jassy taking over as CEO. There's also multiple other very high caliber executives across the company running logistics, running Prime, running third-party marketplace that we think are actually going to make this a pretty seamless transition, even as Jeff Bezos moves from being CEO to more of a higher level seat, chairman, and now he's heading to space in the next few months.
Yeah, I imagine on some level the cool factor has to help the company more than it hurts it. But I finally just want to ask about the regulatory issues. We talked to the D.C. Attorney General the other day who's going after them. Will their move into same-day shipping ultimately invite the ire of regulators, or will everybody argue that the benefit to the consumer overwhelms any concern that they might have about kind of owning the e-commerce space?
I think there's three sort of important points to kind of keep in mind here. You know, one, you hit on just the value and the utility to the consumer through all their investments. Two, I would say that the amount of job creation that Amazon is actually bringing to the United States through all this hiring, and this is a company that employs over 1 million people now, and it's still rapidly growing, so they do matter to jobs. And then I would say point three, they're helping small, medium-sized businesses. You know, while a lot of their business is first party, keep in mind that a majority of the business is still third-party sellers who are selling items through Amazon's network. So are the regulatory headlines going to go away? No, but I would just sort of keep in mind utility to shoppers, utility to job creation, and ultimately utility to third-party sellers are the other three things that Amazon really brings to the equation.
All right. Brian, thanks for all your time today addressing all those issues. We appreciate it. Brian,
thanks so much, Kelly.
Morgan Stanley.
Shepard Smith here. Thanks for watching CNBC on YouTube.